We begin this hour here in Washington, and the U.S. Federal Reserve Chair was noticeably optimistic about the country's economic prospects. This year's growth forecast was cut back because of the weakness in the first quarter, but Janet Yellen hinted there were signs of momentum building up. Ryntjes reports.
U.S. Federal Reserve officials have cut their 2014 growth forecast of between 2.1 and 2.3% from a previous projection of close to 2.9. But Fed Chairwoman Janet Yellen is talking up the prospects of a return to more robust growth for 2015 and 2016.
I think there are many good reasons why we should see a period of sustained growth in excess of the economy's potential.
The Federal Open Market Committee will reduce its monthly bond purchases by another $10 billion next month, but will hold on to its $4.3 trillion balance sheet for the foreseeable future. Official government data this week showed a strong rise in the Consumer Price Index, but Yellen dismissed that data as noisy and sees inflation remaining below the Fed's target of 2% well into 2016. Subdued inflation provides the Fed with more room to keep rates low, maintaining the desire to encourage the long-term unemployed back into the labor force. But she says banks are still reluctant to lend.
It is difficult for any homeowner who doesn't have pristine credit these days to get a mortgage. I think that is one of the factors that is causing the housing recovery to be slow.
Overall, Yellen says households are now less burdened by debt and that wage growth is likely to improve considerably, flashing more cash into the consumer sector. But Fed Chairwoman Yellen is cautioning the markets not to rely too heavily on her predictive power or that of her fellow Fed officials, advising everyone to live with a little uncertainty about the direction of the US economy and Fed policy moving forward. Ryntjes, CCTV, Washington.